Hello and welcome to Macro Mondays here on Landy's Crypto Corner, where we take a look at the higher term timeframes and weave that into our daily analysis. We're actually going to start out on the daily because we do have something pretty important happening here, and that is a break of the range wick low. Now, I did get a question yesterday, maybe it was a couple days ago actually, where the question was why do I have the prior range wick low marked when it is no longer the range wick low? And the reason that I have that marked is because that was the range wick low of the uptrend. And then we had the range wick low of the overall range, which was also the range wick low of the downtrend. So we have the overall range from that high up there at $30,050, $31,050, sorry. Right there. We have the prior range wick low of the uptrend that was holding up for quite a while until we got this new range wick low. And that prior range wick low was coming in at 26,500 or so, 26,525 here on spot. Now, Bitcoin did close yesterday's candle below the range wick low here at around 25,810 and is finding this area as resistance in the lower term timeframes at the moment. But the reason why I want to call this out is because if we look at the Bollinger Bands, we are getting expansion down to the areas that I talk about in the Bitcoin in 60 seconds short videos. And I've been talking about this big area down here for quite a long time, and that is the previous daily breakout level. And basically what this is, this was the overhead resistance, excuse me, this was the overhead resistance that needed to break for us to go and find new highs. That's why it is marked as the previous daily breakout range. Or level. And in the case of the daily breakout level, that was the most recent one to that run up at $30,000 to $31,000. Now, this is the target for the third standard deviation on the daily. So that being the third standard deviation of the Bollinger Bands here. I did get a few questions. Maybe some people missed it, but these are not rolling VWAPs. They look very familiar, but they operate a bit differently and they are calculated a bit differently. So this is Bollinger Bands. Basis band is running a 20 period look back. That's your typical basis band calculation. It's just a 20 SMA or simple moving average in this case. And then we derive our first, second, and third standard deviations based on the position and the volatility of this price action away from or towards that basis band. So we have closed below that third standard deviation. So in yesterday's short video, I said, hey, this, we're not going to really see the etchings of continuation to either the upside or downside until we break above or below the lower thirds. And still, you don't want to get faked out. So we did see a closure below the lower third. So does that automatically mean that we are looking for continuation to the downside? Well, it's more likely than not. You can see that the lower second is now where the lower third was yesterday. So the lower second standard deviation is now where the range wick low was. Now this is the previous range wick low, and that's at 25.8. If Bitcoin can recover back above here on a daily and recover that lower first standard deviation, which is now coming in at roughly 26,360 or so, that would be a good indication that it can come up and test that basis band at around $27,000, which gives it the chance to trend break or take out this lower high, excuse me, I'm losing my voice already, this lower high rather at the upper first standard deviation. And if it did that, that'd be a downtrend break. So the criteria for breaking this downtrend has now been lowered from, this wick high here at 28,473 to around, this is going to be 27,466. Basically, I want to see a closure above that area at around the upper first standard deviation where it currently is at 27,500 or so. Then that gives Bitcoin the opportunity to test up higher, put in higher lows, and change its structure to an uptrend. But for right now, the first downside target nearly hit yesterday here at the previous daily breakout level at here it's at 25,200. You can take the wick high of the prior range over here, which is more like 25,300. I don't even think that's the one. Yes, it is actually. So it's something like this guy here or this guy here. It's like 25,300, 25,288. So basically 25,3. Yesterday's wick low is coming in at 25,391. So, it's close enough. We could consider that a front run of this support area If Bitcoin starts to recover back above the upper second standard deviation, meaning that at this point it reclaims this range wick low and then can subsequently trade up to and then hold above this lower first standard deviation. This would be trap price action or deviation from the range, and then we likely see things play back to around the $27,000 region and then back to this high area around 27.5. So that is the setup that I'm looking at right now. But we do see expansion to the downside in this case. So being below the lower second in this case is going to get more aggressive expansion to the downside. And that is targeting this area at around that 25.3 to 24.8. And then past that area, if that area does not hold up, we start looking at that weekly down here at 24.3. And that is a weekly support. And that's what we're going to talk about a little bit more in depth today is the weekly. Below there is the monthly support at 23.3. So don't forget about that big area, because if things do get aggressively dumpy to the downside across all of these daily and higher time frames, this is going to be a key area to watch. Below there, I do think things take a dive towards, $20 to $21,000 maybe. If it does break down below there, just like I've talked about in the previous videos, you're probably going to hear Black Swan and like all this other stuff. And of course, they're going to cite the reasons of, the Binance stuff that's going on, all this other stuff. But this is, this price action was entirely predictable. Yes, this news came out today and probably accelerated some of the dump. But, we had a lower high. As soon as this wick low is taken out in the lower term timeframes, I mean, if you wanted to be conservative, you just take this open, at around 26.8 or so. As soon as that area was lost, that we were at least going to go test down further, which gives Bitcoin the opportunity to put in a high if it closes down there. And of course, it just dumped off much further. Some of that is news driven and some of that is liquidity driven right now. But speaking of liquidity, one of the big things that I do want to call your attention to is the volume. So this is the first really big volume bar that we've seen in a while, at least after having the weekend price action here. Very, very low volume. So last volume bar or higher volume bars came in on the high up here. We did have this low before this high here in this very condensed range. We did have, so the last big volume bar was this guy here, and then Bitcoin turned around and tagged the top side, and then we had a little bit more high volume. We see we had some higher volume here on the way down, but realistically, the last really big high volume area was this doji, and that was around the FOMC, if I'm remembering correctly. So, this is something to note, that we do see volume coming in, and you're going to hear like, well, it's from liquidations and it's from this, it's from that. None of it matters. Somebody's got to be on the other side of that. For every seller, there's a buyer. For every buyer, there's a seller. So the more interest that there is in this area, whether it stops getting hit or liquidations, and in most cases, many exchanges aggregate liquidations with stop losses getting hit. So it's not necessarily that somebody's gotten their entire net worth or account liquidated. In many cases, they still kind of play with that number, and it aggregates stop losses getting hit. I do know that there are some tools out there that are able to separate that, but it really depends on the exchange's API and the information that is delivering to, whatever application is doing the aggregation of that information. So, all right, that's the daily. Downside targets, this area that we've been talking about for a very long time, 25.3 to 24.8 is the big one. If that area is lost, 23.3, and then the monthly down there at, 24.3, and then the monthly down there at 23.3. So let's go ahead and take a look at the 2-day. Now the 2-day is showing the lower second standard deviation. We got a pretty good spread on the Bollinger Bands here. Let's get rid of the volume there. We have a pretty good spread on the Bollinger Bands here, and I'm not really seeing, I think it's difficult for me to say that this is going to dive at least in the next 2-day down to or below the lower third. So in my opinion, we've got 2 days to close this bar right here. The lower second is typically where you see Bitcoin kind of hang out when we have, a good spread on the Bollinger Bands here. Now, granted, we do have very low volatility, and that could accelerate to the downside. Closures below the lower second here would do that on the 2-day chart. So that is coming in at 25,400 or so. Below there, Bitcoin is likely to see this number shoot up very aggressively. It's already over the moving average there, 11 over 6 or 7 or so. So, that's because we're below the lower first standard deviation. So we are seeing expansion in this case to the downside. It's kind of maintaining a little bit of equal distance roughly here. So it'd be more about just riding that lower second to the downside. But we do get spikes into that lower third, between the lower second and third area. At worst, I think this could aggressively spike that lower third, which of course is coming in around the weekly, and then the lower second is coming in around this this support here at the previous daily breakout level. So that big area at 25.3 to 24.8. So this looks, obviously bearish. And we can see some of the key areas here on the 2-day as well. The lower first is below the prior range wick low there. And that's this guy over here at around 26.5. So if 26,000 to 26,500 is recovered, I do think that things will head back up. In this case, that kind of brackets that 26,350 area that I talked about on the daily. So if that is recovered, I do think things head back up. In this case, we can see the basis band coming in right around that rejected daily high at around 27,500. So if that area is recovered, I don't think it's immediately going to be moon time either. I do think that it comes back up and it retests this area around the 28,000 to 28,600 level, where the 2-day upper second standard deviation is coming in. And it's going to have, probably some pretty nasty rejections around the upper second and third, wherever that comes in, if this were to recover, like, let's say right here. Otherwise, this is going to continue heading down. And, it kind of puts a cap on price until Bitcoin can consolidate and recover those areas and then push the Bollinger Band's expansion to the upside. Excuse me. All right, let's look at the 3-day. I do believe that we had a 3-day closure as well, and we did. All right, so lower first coming in the same area as that lower second, or the lower first rather, on the 2-day. And we can see that the lower second is down here in the previous daily breakout zone. Lower third is expanding down to that that monthly down there that is at 23.3. So in this case, I do think, this is the most likely area to keep your eye on, and it's just lending more confluence to that. We do see that we are not yet expanding on the 3-day. It's not quite ready yet, but, it could pretty quickly get there should Bitcoin continue down, especially any closures below that lower second. I can't say that I'm necessarily looking for that, but we can see a pretty good expansion. So we could just see it ride that lower second all the way down to something like the weekly support at 24.3. I wouldn't necessarily pin your hopes on it, but just watch carefully that previous daily breakout level. If that upper $24,000 level is lost, then that weekly immediately becomes an available target to the downside. And you can see that the basis band up here is just below that really important area at $28,000 to the upside. So Bitcoin below 28K and then below 28.6, I do think is, more likely to head down for liquidity than not. When looking at the 5-day, we can see that we are getting the outlook that I've talked about in the past. Accidentally moved that monthly support there, sorry. And that is, coming off of an aggressive uptrend. What you want to see is the basis band hold. We saw this once already, to the lower first standard deviation. And the lower first standard deviation on the 5-day is coming in right at that previous daily breakout level. In fact, it is at basically $25,000 right now. So that is going to be a big area. If Bitcoin does drop that area down to the weekly support, what you want to see is that it gets bought back up above that lower first standard deviation. Otherwise, we will begin to see downside expansion. You'll actually see this compress pretty tightly in this case because it's a mean reversion play back to this low. So you'll see this number kind of flip-flop around and you'll see a little bit of expansion to the downside. And you'll still see the lower second rising and the lower third rising towards price action for a while. In this case, the lower second, you want to see price close above there, and at worst, hitting that lower third. Well, that's coming right in at the monthly support down here, but that's all the way down at around 20,500. So that is, Bitcoin breaking through the weekly support at 24.3 and the monthly support at 23.3, and closing below the lower second standard deviation. Obviously very bearish, and this would probably produce over time some lower prices if it didn't immediately spike that area and get bought back up above the the lower second standard deviation. You can see that the upper first, second, and third are kind of saying that, Bitcoin has a big range to play in. So, to the downside, the lower third, you rarely will ever see price close outside of the lower third when Bollinger Bands are this far apart on a 5-day time frame. In this case, there's also a support right there. So, roughly between 20,500 to 30,000, $33,000 to $34,000 at the upper third, which is, just below a monthly resistance. So, Bitcoin still trapped in between weekly support and resistance. So weekly support at 24.3, resistance up here at 31.8, which is the upper second standard deviation. So, we have a lot of confluence for, there's nothing dire here. This is a transitionary period in the market, and this is typically when most people get washed the hell out. So your main goal right now should be to stay in the market as long as possible, and really just focus on learning and refining your skill set for trading or stacking. Just stack, Bitcoin or whatever coins you prefer to stack. In this case, I concentrate on Bitcoin because that's the one that I stack. So this is not, of course, financial advice. Do your own research, all that kind of stuff, right? But this is a transitionary period. I've talked about the worst case scenario coming down to retest this high area on the actual lows, which it would coincide with these lows over here, in the $18,000 to $18,500 level. And we're going to end with the weekly here. So the weekly, you can see much like the 5-day, painting that picture where the lower third, go figure, is coming in right at 18.5, which is right here at these lows here. So, and this high area here. That's the lower third standard deviation. I don't think you'd see closures outside of that. In fact, we rarely see that unless we are getting aggressive downside and or aggressive upside in a parabolic move up or down. And quite honestly, in a transitionary period in the markets like this, I'd be looking for like the lower second standard deviation to get hit. That's coming in at around $21,000. But look at where the lower first is coming in. 23.6, just above that monthly support that I talked about at 23.3. That basis band was lost on, or is lost in yesterday's price action rather, and that is at 26,189. So 26,000 to 26,500. I do think Bitcoin's got a fair shot of recovering on the daily, and so on and so forth, and have that trickle up the time frames from there to the weekly. Things kind of capping out on the upper first lately, which is now at 28.8, basically 28,750 rather, at the upper first standard deviation here. Now let's go ahead and look here. We do have very low BBWP, but this is not ready for a weekly trending move just yet. If it was to the downside, to be frank with you, this is more than likely going to head to this area down here. If it is to the upside, it is probably going to head to the major, monthly area. So, if this thing's going to start, expanding to the upside, its first big area is going to be that $31,000 to $35,000, and to the downside, there's lots of, supports below right now, basically between here and, that 20,500. So, not that Bitcoin can't slice through it, but expansion right now is not on the table. This is going to compress. So if it can hold above $25,000, $24,000, I think that things will be looking very different coming up soon. But if it does dump out, No, it's just going to be a longer form consolidation before any kind of bull run. We've had a very nice bull run off the lows, nearly 100% return off of that run up. So we might as well look at the Stochk pivots. Now, I will say this again. This is a paid indicator that I'm using because it gives the Stochk pivots or the number at which the Stochk would turn up or down. This can be found at app.crowntrading.net. It is by KVDB, and I believe it's called Advanced Stochk or something like that. So I don't get paid by them. I'm not sponsored by them. I don't make any money if you were to go buy it. I just need to make it very clear that you're probably not going to find a free tool that does this. I find it very helpful to know where this pivots. So that being said, the weekly is at $29,000. So just a little ways away from price action right now. We've got the 5-day has now increased to being right around 29,200. We've got that 3-day is about 26K. So that supports what I was saying earlier about the daily closing back above 26 to 26.5. That's the big area to the upside to recover as it stands right now. The 2-day is going to be a little bit higher. They're at 26,765, so basically 26.8, and the daily is now pivoted at 26,685. So, even getting back up to 26,500 for the bulls here wouldn't actually turn Stochk momentum, but from a Bollinger Band perspective, getting back above the lower first standard deviation on the daily is going to slow down that expansion. Yes, it could just continue trend, because if it's going to stay bearish, this thing can come all the way up to the upper first and still remain bearish because it wouldn't be breaking any structure. So in this case, it could get a beautiful buyback all the way up to the upper first standard deviation, and still remain, trending downwards, because if it doesn't take that area out, and if it closed above and didn't take out the wick high, then it's, more bearish divergence, so on and so forth. So, and let's just quickly check on that for the daily as well. We are looking at this area. Was there any bearish divergence? It's not even calling a high yet, but technically, yes, there was bearish divergence. So between this high and this is a high now. So there was a bit of bearish divergence. The easy part of that move's played out, and there could be bullish divergence available coming from the 10th of March here. So that would be, no, I'm sorry. That's not accurate at all. I forgot that the 10th of March was down here in the $20,000 range. That's that 20,500 area that needed to break with a low at around 19.5. So yeah, no bullish divergence locally. There's no other lows to really look at here, is there? So this was not a low. This was a consolidation to a high. There is a nice order block down here. So I do want to actually put this on my chart quickly. And I think I've called this one out as well prior, but it's a little order block here. And that's coming in at around 24,400. Well, we can just take the close open. So the open was at 24,761. So basically that 24.8 region that I've been calling out. And the close, because it was a bearish candle, is 24,377. So basically 24.4 to 24.8. There's an order block. So that lends confluence to the analysis that I had shown you in the beginning of the video. So I'm going to let you guys go. You have a good morning, afternoon, and evening, no matter where you're in the world. Please trade safe. And of course, as always, stay safe. If you have any questions, go ahead and leave them down in the comments below. I'd be happy to answer them either in the comment section, or I'll integrate that answer into a video. I will be doing altcoin roulette, and I will explain the rules of that. It's a program that I came up with that just pulls random altcoins, and you hit roll, and it basically it pulls 10 random altcoins from Binance in this case, and then hit roll, and it picks one, and we'll do analysis on it. It's a good way to kind of not have any preconceived notions and just look at charts and have it pick out some good, and or we can look at some terrible charts too. I will be doing that soon. That will probably start out in live stream format, and then I will record or cut it together later, and then kind of go from there. If you like the video, go ahead and like it. And if you don't like it, go ahead and hit the thumbs down. It still helps me out. So, and then share this video with whoever you think might find it helpful. Please turn on the bell for notifications because most of my videos are not even showing up in your feed. So that's what happens with smaller channels and even some larger channels. You have a wonderful one. Have a good morning, afternoon, and evening, no matter where you're in the world. Please trade safe. And of course, as always, stay safe. With all that said, Lindy out.